thinking about listing your company. And then you start fighting for an IPO. But on what information are you fighting an IPO? If you just scratch a little bit, without even digging, just scratching, then you realize this is an IPO which was only subscribed less than 3%. So the other money was political money from Uganda brought by Museveni. Was Museveni buying shares? No. What was he buying? He was buying control. He was buying control. Yes, power. He was buying to control the company. That give me shares, give me board members, but also give me veto power of policy, veto power on policy, but also veto power on CEO. And because Kenya was desperate, they signed. So the shareholders' agreement, there's nothing Kenya Pipeline can do without Museveni. So that is the IPO that was successful. The second thing about this IPO that was claimed by government as successful is that if you look at the category of local companies, you see 41% of the shares were bought by local companies. Just ask yourself, oh, you guys here, you work for investment companies. Did any of the one you work for buy? None, unless it's government. Because the 41% listed as government-related, as Kenyan companies, was led number one by NSSF. Secondly was superannuation fund, pesa tu ya wafanyikazi. 3 was unclaimed assets authority. 4 was Kenyari. So those are the local companies that they were listed there. So you are there now as a policy maker. You have had news. It was successful, 105% oversubscribed. Then you start making about how our market is full of money and companies are being oversubscribed. But then after that, oh, the share, hata haijaanguka vile wa Kenya walikuwa wanasema. Si ndio sasa watu watasema? Why? The same company that was the lead transaction advisor was given a role with money to make sure they prop up the shares. Is you aguke below 9 shillings within a month. Now, ask yourself as a CPA, a company listed in the NSC, trades for a month between 9 shillings and 9.08. Just try to think, any company listed in the NSC is oscillating between 9 shillings and 9.08, oscillating around there. And those who work in the financial industry, because I think everyone who is a capital market know. So there is something called propping. So you create an artificial demand for a share, and you actually place it in the market. So when people are trading, they realize, hey, there is a block person here wanting to buy shares. So they prop it for a month, so that you don't embarrass the person who rang the bell. Now they rang the bell and the share collapsed. After 1 month, kibarua iishe. So what I'm trying to say, you dig deeper for information, so that you make your decision not based on the superficial you see, but you make your decisions based on the reality. The reality is, for example, take that company with P/E ratio of 22, the highest in Kenya, in any listed company, including Safaricom has a lesser P/E ratio of 13. The energy sector has P/E ratio of 6 for Kenyan, of around 6 for Total Energies, and below 2 for Kenya Power. And then you are told to hold a share here with a P/E ratio of 22. Why? Make it scarce in the market. Because the retailers are only holding 2%. Let's mop it up a little bit so that there is no supply. And because there is no supply, so we can prop the share to the price we want. So we'll be holding mchanga. You know the way you can be told, shikilia mchanga kwa mkono, it may turn out to be gold when you open up your heart. Are you getting what I'm saying? You know, I can create scarcity of sad. I say hakuna mchanga ya white hapa. Wewe shika hii mchanga, tunaona kama itakuwa kwa bei kali. So unaishikilia, unaambiwa kuna time utafungua hivi, kuna mtu atakuja ainunue for 2 million shillings. So superficial decision making. I've used Kenya Pipeline because what I'm talking about is totally true, but also it may end up misleading somebody by reading data coming from government, but which is misleading. So always dig deeper. Let me go now to the real issue so that I sit down. Now I'm not talking about business. I'm neither talking about entrepreneurship. I want to talk about investments. And especially given this time you are in. People bought shares. Then they are wondering, hii share itafika wapi sasa? The Dow Jones in the US is come. Yesterday it went down by close to 2%. It has gone down by over close to 10% in one month since February 28th. So you are here seated and we are wondering, what do I do now in this kind of time with my money? Of course, here CPS, we are no longer talking about whether you buy plots. That we already talked about in Mombasa. And I don't think anyone of you is buying their 7th plot yet now. I think you're out of that discussion. That's why I'm not going back there. I'm not talking about whether you fix your money in the bank today. Because I think you should know better. I'm also not talking about active business. Because active business is good. It keeps you active, but it also aids production. And I don't want to delve into that today. I'm a proponent of entrepreneurship and business. Whatever business you are doing, the more you expand it, the better. The more you do business, the better for the economy and for yourself. So I'm not talking about that also today. I want to go direct to investments and our demeanor around this time. The time when the global markets are being raided on. There is a cold that is permeating across all the global markets. What should we do now at such a time? And that's what I want to talk about in a few minutes. First of all, to discount that point, there is no one in this hall or anyone watching us online who has lost money in the NSC and they bought their shares for the last 6 months or 1 year. None has lost. And especially if you did your research to buy and you bought value, no one has lost money. Even the people who bought shares when we were in Mombasa, most of the shares we were talking about there, even after Iran, and even the NSC has been down since 28, those people are still enjoying profits even today. Why? Because our market has been grossly undervalued, including now. So the people who bought shares, let's say 6 months ago, let's say Kenyan. Kenyan was maybe 8 months, 12 years ago, 8 months, 12 months ago. Kenyan was still around 6-7 shillings. Even after paying dividends, Kenyan is still around 9 shillings. But we are saying it has gone down, given where it was a month ago. Equity Bank was still in the 50s. Yet it went up to 80. It's now around 70. So anyone who bought, they are still enjoying a bigger profit than any other investment you could have done for the last 6 months or 12 months. Take KCB, was in its 50s. Even after paying special dividend and announcing another one, and even after Iran, the share is still in its 70s. Take NCBA, was in its 70s, it's now in its 90s. Take basically any Kenya Power, was in its 12, 14s, is now in around its 16s. After falling a little bit due to Iran. So this is the reason I'm mentioning those things. And I want to refer to this because I want to be methodical. All the time you are doing investments, you can buy land, T-bills, you can fix money. So the argument usually is, you know land you can't lose, and T-bills and fixing money you can't lose. That's usually the argument. But I want us to be sequential here. When you say you can't lose with land, are you dealing with the question of worth, or are you dealing with the question of liquidity? If I have my phone here, which is only one, and there is no other make of this phone other than this one, so I price it the way I want. But if there are a million phones out there, So the fund becomes liquid because there are many more people who can access it. So out of that liquidity, when there is any information about this kind of fund in the market, they get affected immediately because there are many and people are sensitive because of the demand and supply. So let us not confuse when you are investing between dealing with a liquidity problem and a value problem. The reason why we purport land doesn't lose is because it's not in the exchange. It's not tradable every day. That land is only exchanged only when you are actually selling it. Remember, in terms of oil and in terms of the other instruments, they are tradable every day. So any information in the market affects them every day based on the perceived information. Now, when you talk about money doesn't lose, fixing money. I think all of you as CPS know that is a fallacy. This is the reason. Now, the world, if there is a recession, for example, so shares collapse when there is a recession. And then what happens? The government, to incentivize the market, they lower interest rates. Please be sequential here. When money is lowered, there is a time US lowered interest rates to 0 in the 2007-2008 financial crisis. What does that mean about your money? It means the yield of your money is 0. So even fixing money also becomes 0. It's no longer paying. And it therefore means the yield of your money gets decimated 100%. If Kenyan interest rate is 8% and it comes to 0, it means the profit you are getting out of your money evaporates to 0. If interest rate moves from 8% to 4%, it means the yield of your money goes down by 50%. That is the reality. Leo sio jokes, ni ma jargons. But I'm hoping tunaenda pamoja. So you are in the financial industry as a bank. So you are making decisions today. You are in a microfinance today, and because you are CPA, you did economics, people are looking up to you. What are the things you are thinking about Iran and your company? Your mind should stretch beyond oil. Your mind should stretch between, even when there is D to G, we still have to pay our fuel. Somehow, we still have to demand dollars. So if a barrel of oil is up 50%, that should be talking to you about the demand for dollars in the next few months in Kenya. It should be talking to you about what the demand for dollar will do to the Kenya shillings versus USD. It should be talking to you about where should your money be now in this kind of demeanor. In which currency should your money be? That should already be speaking to you. Let me come back to the market. So every time there is a disruption, there was one internet bubble in the US around 2000. There was the financial crisis in 2007-2008. There is Corona time, when the markets in the world collapse, including our own, because we are a global market also, so to say, because we accept also global financial flow into Kenya. So we are here now. This is not even a crash. It is a bump. The world is, yani, kuna mtu anastua markets. So here, because oil is so integral, oil has permeated to New York Stock Exchange, Johannesburg, to South Korea, to Kenya. So we are there now, and we are wondering, where do I invest my money? What do I do? Including me now. So what do I do? I have assets in shares. You have assets in land. I have assets in other things. So what should I do? Number one thing you have not to do, even as you find out what to do. Avoid panic sales. You know the way unaona share inashuka, then you are calling the broker, hey, uza kabla ishuke sana. Because you'll actually not be using the degree and the CPA you got in campus. You'll not be using it. You'll actually be discarding it. Avoid panic. And I'll give you some scenarios here. During the internet bubble, Mnajua hii kampuni inaitwa Amazon ya Jeff Bezos. So Amazon was also an internet company. It was a reset of all internet companies. They all collapsed in terms of share price. Some even collapsed literally as companies. So Amazon by that time was valued by the market at around 37 billion US dollars. So the share price was around $113 of Amazon. As Jeff Bezos was gazing like this in the market, the company was doing fine. There's a difference between the company and the market. The share price collapsed to $6 from 113. So the valuation of Amazon came down to 1.7 billion US dollars from 37. It was down over 90%. 90%. You know, this looks like far-fetched. We are talking about your 1 million you had put somewhere. Na mtu anza kukwambia iko 60,000. That's what we are talking about. Yani unapigia broker, hiyo kitu yangu imekashona iko aje, anakutumia portfolio valuation, which was 1 million shillings, it is reading 65,000. Now, a few, of course, months later, it rebounded. It's the same company we are talking about today with a valuation of over 2 trillion US dollars today now. Now, if you study many companies, what happened in the 2007-2008 financial crisis, it is replete with those kind of stories. People, you know what makes the share price to collapse? Because there are so many people supplying, but there are no people demanding. It's the same thing that makes the banks run. Bank run is a bank collapse. It's when we go to Equity, to any bank to demand all our savings. But it's our savings which you have lent your brother as a loan. But your brother is not queuing to pay the loan. But you are all queuing to receive the cash. So that's what is called a bank run. Because we are demanding what the bank does not have in liquid. So even in the equities market, we all want to sell. But everyone is fearful. And when everyone is fearful, there is no demand. When there is no demand, and there is a mismatch between supply and demand, supply takes over and the price collapses. Now, I've been a proponent and I want to request us even today. Avoid being a trader. Avoid being a trader. Always be an investor. When you're an investor, you will never care about the share price. You will care about the value. I gave you this example. I'm giving it because it's public information. So the company, the NSE in Kenya collapses like in 2003. After collapsing, the share price of many companies collapsed. There is a time in the last 3 years that KCB shares were trading at around 25. I'm not talking about decades ago. I'm talking about 2 or so years ago. Kenyan collapsed to like 3 shillings and 50 cents. Kenya Power was at 1 shillings 80 cents. That is the time you need to apply value investing even better. Why? I've told you there is the company here and there is the market here. So let's put company, Kenyan, but you also put another company there. You are allowed in Ebu. In the same, put another company, that is investment vehicle. You are allowed in Kamuru. It's also part of that. And put Safaricom share. All these are where your money is. Tuende pamoja. Okay, where is our money? Can somebody shout? Anywhere your money is? Come here. Because I'm almost concluding. Come na kitambu. I want us to put fundamental one side and the market the other side. So in the fundamental we put in draw a line here. Draw a line here like in your book. So on the left side, let's put all where our money is. One person said MMF. Second one, I'm asking about your money. Just shout where your money is. Kenya Power. Another one? Co Bank. No, Co Bank in terms of share or in terms of deposit? Put both. Co Bank as a share and the hapo chini Co Bank as a deposit. So that one can start for all the bank deposits. LAD, put LAD. Put LAD, put SACCO. Put Forex. Forex means you are holding dollars or you are holding euros. Okay. Please mention any other. It is in cows. Weka cows. Put also avocado. Yes. What else? Yes? Mansa X is still one of the, put it, yes. Crypto. Weka crypto. ETFs. Mswali. Mattress. So mattress will start for real cash. So let's go sequential. Good people. Gold. Weka gold. Very good. If we had a longer session, we would have seen how and why cryptocurrency is behaving the way it is doing and why the gold is behaving the way it's doing. But hiyo ni homework nitawapea. But there is a correlation of all those things. When you watch CNBC and you understand it, you actually almost preempt what the other one will do when you see only one trigger. Now, MMF shares, LAD, etc. Those are investments. Are we together up to there? Of all the things we mentioned there, how many are not tradable? How many, once you put your money, you wait for a certain period of time before making a decision on it? Tick LAD. No, shares is tradable. Unless you're buying an unlisted. Very good. Actually put shares, but private equity. Private equity shares. Hapa tu as the last one. And you tick it. It's not tradable. It's like SpaceX in the US. One of the companies owned by Tesla, by Elon Musk. So it's not traded. So it has no vagaries of the market. Doesn't matter where the market goes. It's not tradable. In fact, put family bank shares to make more point. Put SACCO shares to make even a better point. Because you are all in them. Now, when there is a global shock in the markets, does it mean there is a global shock in the economy? Sometimes yes, sometimes no. Sometimes the global shock of the economy causes the global shocks in the markets. Like what we are having today is the global shock in the supply chain of fuel. Out of that, the fuel price goes up. So that is the production side of the economy literally. So it is the economy that is triggering signals in the market. But the others that just happen, let's say bubbles. A bubble happens because the markets have overheat. The companies are priced so high that it doesn't make sense. Let's say, tuanze kuuziana hii maji kwa auction. Jiro aseme 100 na mimi niseme 200. Jiro aseme lazima watu waone mimi ni mwanaume 250. Then these are the Jiro comes 850. Now we all say wacha apewe hiyo maji. But is that water worth the 850 shillings? That is how the markets work. So let's come here. One thing that is not tradable is the LAD. 2 is privately held shares. The third one, SACCO shares. Please keep ticking. Bank deposit is not tradable. Mukikubaliana na bank unanilipa 8%, you are not going to trade it. Is that so? Even when you buy T-bills, but you are not trading them in the market, they can also pass as non-tradable. Most of them could, because it depends with your choice. Because already agreement, mumekubaliana na government, utanilipa 10% after a year. So wewe kama hutaki stories za market, si unaenda nyumbani unagojea your 10%. So, wanasema MMF, but depends. That one is half-half. Or okay, we can put it. Now, what are the ones that get traded in the market? That your worth is determined daily. Shares is number 1. Forex. Gold. Oil. Very good. Commodities. Gold plus commodities. Crypto. Precisely. Now, if I hold land here in Ebu, 10 acres, and then you hold a 10% stake in Family Bank, which is not selling their shares in the NSC, and you are told that 10% is 2 billion shillings, whether the market in Kenya goes down or up, do you get affected? Do you get affected? No, directly with in your wealth. There's no effect. Is that so? Yes. Now, if Family Bank lists tomorrow, your 2 billion shillings, which was you are worth in Family Bank, the share price goes down, and it becomes 1 billion. Have you lost or not? Have you? Are you sure you have lost? Have you lost? Let's say talk on the basis of 2B. That's our base. So the valuation comes down to 1B. Have you lost?
Okay, you only lose when you sell.
Jiro, say something.
If the company itself has no change, no effect, it's just the pricing. It's like if I have a goat and someone in the market says it's 10,000, he has a 5,000, but my goat weighs 15 kg. The 15 kgs have no change.
You lose when you sell.
Nataka tuulizane hii maswali. Yes, my brother.
If I sell, I lose. When you sell in the market,
Yes.
at the prevailing market prices, you lose.
Uh-huh.
If you choose not to,
Yes.
you hold on.
Yes.
For example, I bought some shares some back of
Yes.
I've lost for 100%.
Yes.
And it is still there. I've not disposed.
Okay.
Now, I bought KPLC. It was 1.35.
Ooh. Please say that about especially the second one. Yes.
Yeah, okay. Thank you. I'm saying about KPLC at 1.35. And then we are in group of accountants and told them, it's 1.35. It's undervalued. Let's buy. Me, I bought around 1,000.
You bought how many?
1,000 shares.
Yes.
And I just said, let it be.
Yes.
Today is around 17 shillings. So if I decide to dispose, I have more value because it's my decision to dispose.
Yes.
But if you don't dispose, you don't lose.
Higher. That's a good point. And that's why I want us to conclude that. The reason why you are saying your land in Ebu has not lost value, and the reason why your Family Bank shares has not lost value, and the reason why your SACCO shares purportedly have not lost value, is it a matter of losing value or is it a matter of illiquidity? That's what you need to always, if you need cash now and you hold that land in Embu, can you get it today? So, when now you see when the markets are volatile, the thing you have to keep on asking yourself, that land you have in Kitagera, do you call your land agent every day to ask about the price of land in Kitagera? Then why are you calling your stockbroker every day because there is Iran? Why? Now, that is where the opportunities come in. Value investing is looking at parameters that I'm buying a company cheaply. When I buy a company cheaply, I don't care whether the share price goes down. In fact, I care more when it goes down because it gives me value to buy a bigger stake. So, when you do your math, and I'm summarizing, take for example in Kenya today, and I'm being very frank. If you have 1 million shillings today in Kenya, and we can all agree, Jerry bought shares after Mombasa, some of you bought, the ones we talked with, no one has lost money, even after Iran. No one. So what does that tell you? That yes, the graph may be this way sometimes, but it's usually this way as it goes up. How comes even after the Dow Jones are down to 45,000 in the US. How comes they are still higher than during Corona peak, before Corona peak? How comes? Because even after the collapse after Corona, the markets have a way of dusting themselves off and also continuing with safari. Because many companies evolve in terms of growing. As the global economy grows, as the population grows, naturally, for example, Coca-Cola, they'll sell more Coca-Cola to more people. That's the mentality you always have to have. So this is the time for you to use your CPA even better. If I had 1 million shillings today, around this time, if I had land, if I had fixed deposit, if I had government instruments, I would sell them tomorrow, on Monday. I would sell them and first of all, hold some cash a little bit. And hope and wish the NSC will still go down in next week. Still, I'm holding shares. I'm not saying I've sold what I have. I will hold what I have in the stock market. But believe you me, I would dispose fixed deposit, liquidate cash. If somebody would buy my land, I would sell it. If somebody would buy my unlisted shares, I would sell them. Why? They have not been affected by the noise of the market. They've not been affected. But there is a lot of value in the market that has been affected by the noise. This good cow, ambayo bado maziwa inatoa ile. Lakini imechafuriwa na imerara kwa, cow shed. So hiyo ng'ombe imerara ikapata uchafu. So ikatoka nje, kila mtu anasema, "Hey, ng'ombe nayo sigioshwa kwanza kabla ya kuletwa soko. Mimi ningetaka kununua hiyo haijaoshwa." Because a gallon of water will be so cheap for me. So utapata ng'ombe ya 70,000 just because it is dirty, kila mtu haitaki. Anasema, "Hey, mimi wacha ni kale kameoshwa kamepakwa mafuta ndio unataka." This is the time in the global economy, and you can write this. Tutakumbushana baadaye. This is the time that will make